Hello everyone. It's me, NYSE Einstein from the Florida New York Stock Exchange, January 28th, coming into the end of the month. A lot of red on the screen. We came in this morning after a weekend, after a solid close to last week's market, on a lot of earnings and positive things coming out across the board. Market was on fire. Dow Jones at 24, 5, 6, and 7. Spiders on a nice tear. We came in this weekend after a weekend of a lot going on, a lot happening with the administration, a lot happening with the shutdown of the shutdown of the shutdown, before the new shutdown of the next shutdown, before they shut down, the 3-week pause on the shutdown. The economic effect on that, we will never know. The obvious effect economically on those 800,000 federal workers who went without paychecks was significant, and not enough people were really aware of that, acknowledging it in a big way. All that being said, at the end of the day, how does that affect the market? We don't know, but we came in today back to the fundamentals, back on earnings. Cat Tractor was the first shoe to drop. Earnings missed, guidance missed, talk about China slowdown being the reason. That's a multifaceted problem. Not only were Cat earnings down, but it was based on a projection that economic global growth and China were going to be slowing down. That kind of breaks down any facade of the markets, causes anxiety, fragility, fracture in the marketplace, in the economy, in the view of the markets, basically the fundamentals. Boeing a little bit, Nvidia, the premier of the tech, completely missed and got eviscerated down 14 or 15%. So we had multiple reasons to be anxious, multiple reasons to sell off. Day at a time, you and I know that we need a reason to buy it, which was Friday. Today we needed a reason to sell it, and that was Nvidia, that was Boeing, that was Cat Tractor, that was the word on China, global growth slowdown. We came in, we're down as much as 350 at the low. There's plenty of green on the screen. We've got stuff coming out of Venezuela, the U.S. sanctions coming in at the end of the day. Basically, 4 million barrels a day down to 1 million barrels a day. A regime that's in power that's a sketchy, skittish, at best, Nazi regime. An unknown, an unknown, an unknown. Oil selling off on what? I'm not sure. We have had a huge rebounds on oil over the last couple of weeks, so maybe it's just pausing consolidation. Oil down almost 2, Russell down 10, S&P down 20. Volume kind of anemic, virtually 50-50, 6 to 5, sell side on the imbalances. I mean on the up to down volume. Market closed down 2, we were down 350 at the low, almost 400. So that's not bad. We did hold our ground. So when we have 1 or 2 things that we're selling the market off on, the fact that we don't really sell off in a drastic way, selling down 400 is emotional selling. Smart money buyers come back into the market, pare it down to about 200. That's a reasonable showing for the day. So let's not go too much into it. It's Monday, coming into the end of the week. Could be a profit-taking day, could be a further sell-side day. We don't know. Earnings on the table, anxiety and whatnot, sell-off and madness coming out of Washington. China, growth, tariffs, uncertainty, global growth. Oil, Venezuela. There's a lot on the table. Some few reasons to buy, a lot of reasons to sell right now. I'm not clear which direction we're going to go. But net at the end of the day, we're holding steady. 24.5 in the Dow, 26.50 on the S&P. I think we're kind of good to go. Let's see what happens. It's NYSE Einstein from the Florida New York Stock Exchange. I'll see you again tomorrow. I love you all. Later.